Hello traders! In today's video, I'm going to take you through my trading journey starting with just $120 using my trusted method, the daily compounding strategy. This approach has consistently delivered solid results when applied with discipline and proper risk management. Make sure to watch the video until the end as I'll guide you step by step from market analysis, identifying the best entry points, executing trades, all the way to reviewing the final results. This isn't just about profit, it's about the full process and mindset behind successful trading. If you're interested in learning this strategy in greater depth, I also run a VIP group where we analyze the markets together in real time, share insights, and grow as a team of focused, committed traders. Don't forget to like, subscribe, and turn on the notification bell so you won't miss any upcoming videos filled with powerful, proven trading strategies. Let's get started. I decided to open a buy position because the price has reached a strong support area, which has been tested several times before and has successfully caused upward bounces. This indicates that the zone remains valid as a potential trend reversal point. Additionally, I noticed a decrease in bearish momentum, along with a rejection candle, confirming a possible shift in direction. Now, let's see if this analysis plays out as expected. Okay, profit. Let's continue this session by opening the next market to look for more trading opportunities. I decided to open a sell position because recent candles have been closing below the green trend line, indicating that bearish pressure is still strong. Even though the candles alternate between green and red, the consistent closes below the trend line suggest that the downtrend is still valid. Rather than going against the trend, I chose to follow the direction of the market. Let's see how it plays out. Okay, profit. Now, let's open another market and look for the next opportunity. I opened a sell position in this market because I noticed a crossover signal on the MACD indicator, where the MACD line crossed below the signal line. This is typically a strong sign of a potential bearish reversal. In addition, the price movement showed a weakening in buying volume, further confirming my decision to follow the downtrend. Let's see how it plays out. Okay, profit. Now, let's move on and open another market to find the next opportunity. I opened another sell position in this market because there was a strong confirmation from two key technical indicators, the moving averages and the MACD. A crossover occurred on the moving averages, where the fast MA crossed below the slow MA, signaling a bearish trend reversal. At the same time, a downward crossover also appeared on the MACD, reinforcing the bearish signal. With both indicators aligning, I felt confident enough to go for a sell entry. Let's see how it plays out. Okay, profit. Now, let's open another market. I decided to enter a buy position because the last candle has touched the red line, which I consider a key support area. In many cases, when the price hits a strong support level, it tends to bounce upward. Also, any potential downward crossover is likely to fail since the candle has already reached the oversold zone and is being held at support. So I made the decision to follow the potential rebound from this level. Let's see how it plays out. Okay, profit. Let's move on to the next market. All right, I entered a sell position in this market because there was a crossover on two key indicators, the moving average, and the MACD. In addition, the red line, which previously acted as a support level, has been broken. When a support level is breached alongside confirmation from two technical indicators, the potential for a downward move becomes significantly stronger. That's why I chose to follow the trend and open a sell position. Let's see the result. Okay, profit. Let's continue with the next market. Okay, I entered a sell position because, as you can see, the current trend is showing a sharp decline. Moreover, the majority of the candles are moving and closing below the green line, which indicates that bearish pressure remains strong. In this situation, the potential for further downside is quite significant, so I decided to follow the trend. Let's see the result. Okay, profit. Now let's open the next market. I entered a sell position because the market is currently showing a strong downtrend. This is evident from a series of candles consistently moving below the trend line. Moreover, the latest red candle clearly rejected the red line, which acts as a resistance. This rejection indicates that selling pressure is still dominant, and there's a high probability that the price will continue to fall. Let's see how the price moves next. Okay, profit. Now let's open the next market and look for another opportunity. I decided to enter a buy position in this market because there was a crossover on the MACD indicator, where the MACD line crossed above the signal line. This is typically an early indication that buying pressure is increasing and the trend is likely to reverse to the upside. Additionally, the MACD histogram also shows growing upward momentum, which reinforces my confidence in taking this buy entry. Now let's see the result. Okay, profit. The signal worked well. Let's move on and open the next market to look for another trading opportunity. I entered a sell position because the last candle touched the red line, which acts as a resistance, and formed a wick above it. This indicates that the price attempted to break through the resistance, but was immediately rejected and pushed back down. Such a pattern often signals strong selling pressure and a high potential for a downward movement. That's why I decided to take a sell position. Let's see. Okay, profit. Now let's open another market. Okay, I entered a sell position because my analysis is the same as before. The last candle touched the red line, which serves as a resistance, and formed a wick above it. This indicates a rejection from the resistance zone. Typically, this kind of setup signals strong selling pressure, increasing the probability of a downward move. Let's see. Okay, profit. Now let's check another market. I entered a sell position because this area is a strong resistance level. The price has touched that resistance line, and based on previous market reactions, this zone often causes price rejection. Therefore, there's a high probability that the market will reverse or pull back from this level. Let's see. I entered a sell position because the price has now touched the red line, which acts as a resistance. After hitting that level, a red candle appeared, indicating a rejection at that resistance area. Although there is a crossover signal from the indicator, it will most likely fail due to the strong resistance pressure. That's why I followed the rejection and opened a sell position. Let's see. Okay, profit. Let's open another market now. All right, I will withdraw only $100,000 for now. The remaining balance will continue to be used for trading privately behind the scenes. All right, the withdrawal was successful, and now I'm just waiting for the funds to arrive in my USDT wallet. My remaining balance is $157,000, which I will continue to trade privately behind the scenes. That's all for today's trading session. If you want to learn my compounding strategy and receive my trading signals with 97% profitability accuracy, feel free to join my VIP group.